5 a.m. in New York City. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. December in the balance. Stock future is getting a lift as traders increase their bets on a Fed cut in 2 weeks. A Thanksgiving deadline. European officials racing to buy Ukraine more time with a counterproposal to the US's 28-point peace plan. And no deal. BHP is walking away from Anglo American again after a fresh takeover approach. Let's take a look at how we are entering this shortened trading week. Futures higher, continuing the lift that we got on Friday. Of course, the S&P 500 still end of the week down 2%. The Nasdaq 100 still end of the week down more than 3%, even with those gains in Friday's session. It does appear, though, that the sentiment continues. John Williams has a lot to answer for. Let's look at the bond market because we're not seeing too much movement in pricing there. But odds of a December rate cut are now around 75%. That's a far cry from where they were before Williams spoke. So will we get more Williams speak, more clarification on what he meant when he said near term? Will other voices join him in potentially putting a December rate cut back on the table? I do also want to point to Bitcoin as well. We were up about 7% from its low last week, but we're now just below $87,000 again. And once again, just on the stock market, we have a couple of strategists out today, including Citi Wealth head Andy Sieg, saying that he's seeing record inflows and that this bull market has more to run. Mike Wilson saying we're closer to the end of the correction than the beginning. So a couple of positive voices out there for what it's worth. Let's get to some individual movers now this Monday morning. Over to London and Chloe Melly. Chloe.
Good morning, Bonnie. Let's start with Alibaba's shares today, and they are up after the company's AI app Quen debuted very strongly with more than 10 million downloads in the first week since its relaunch. So that means that Alibaba might be able to rival OpenAI's ChatGPT at some point, and that now puts the question on how the company can leverage this app to drive people to its consumer business. Moving on to Alphabet, which is also up this morning after Salesforce CEO Mark Benioff praised Google's Gemini 3, saying it was a major breakthrough, that performance was faster, reasoning was sharper, and that he would not be going back to ChatGPT. And we can see that praise reflected in those Alphabet shares this morning. And finally, Tesla is also up after Elon Musk said over the weekend that the company had finalized design on its AI5 chips and would start work on the AI6 chips. Those are chips that will be used in the data centers and cars. And it seems that is a development that is received very warmly by the market, and we are up almost 2% for Tesla.
All right, Chloe, thank you so much. A good roundup there as we head into the Monday trading session. And later in the hour, we'll push ahead to a busy week of economic data. We'll be speaking with Lauren van Biljon of Allspring. Productive talks then on the Ukraine peace plan.
It is in my personal view that we've had probably the most productive and meaningful meeting so far in this entire process since we've been involved in from the beginning. We have a very good work product that was already built on a foundation of input from all the relative parties involved here, and we were able to go through some of those items now, point by point, and I think we've made good progress.
Joining us now is Bloomberg's Oliver Crook, Chief European Correspondent. So productive, according to U.S. Secretary of State Marco Rubio. Productive for everybody, Ollie?
Well, that's the big question, Vonnie, and that's the question I put to the deputy head of Zelenskyy's office when I spoke to him about an hour ago, asking him what the status of the talks are, where are we on these negotiations. And I think there's a lot more work to be done than the United States would like, and certainly at the sort of timeline that they laid out with wanting to get a proposal through by Thanksgiving, that is this Thursday, which seems pretty unlikely just given the complexity of the issues ahead. I think, Vonnie, the real difficulty with these negotiations is that under the Trump administration, the geopolitics in 2025, basically none of American allies, whether it's the Europeans or the Ukrainians, can speak too honestly about what they actually think about what's in this proposal. So until we actually see the text to see how much of an edit there has been made, how much of it has shifted, it is going to be hard to say how happy each of these sides are. That being said, the Ukrainians have made positive indications from the discussions over the last 24 hours in Geneva. So too have the Americans, and now it has to get into European hands. We just spoke with the Lithuanian foreign minister, who's bemoaning the fact that basically the Europeans have been completely cut out, but he also said they need to earn their place at the table. And one of the ways that the Europeans can earn their place at the table in the conversation about the future of Ukraine is by going after those Russian assets, 140 billion euros of them stuck here in Belgium that the European leaders just cannot agree upon. Yeah,
it was a great and timely interview, Ollie, but what about this counter proposal that Europe seems to want to come up with to give Ukraine at least more time than the Thursday deadline? Is there something on the table? What can they propose?
I think that what is on the table at this stage is not very clear from the European side. I mean, this has been from the very beginning. This is part of the questions I put to the foreign ministers. We've heard a lot of the European positions, but we haven't heard really a comprehensive plan. We haven't at least seen a comprehensive plan when it comes to Europe. And again, and the one place where they did have a way to exert leverage is on these Russian assets, and they were unable to move with that. And so, Vani, I think that this dawns yet again that realization within Europe that, you know, the Europeans want to talk like a geopolitical superpower, but they are not acting like one. And as time goes on under the Trump administration, something needs to change. Either they need to step up and start acting like one, or they need to stop talking like one. And I think that is the policy issue for many of the Europeans. And Vani, I'll fold in another thing. Here today, Jameson Greer, Howard Lutnick in this very building to talk with trade representatives from the European Union. How much leverage do they have to put pressure on the United States on trade when they're so dependent on them for so many things, including them keeping them on side for Ukraine? That is part of the difficulty here the Europeans have under the Trump administration have had for the last year or so.
Exactly, and the EU saying no deal is expected today or anything like that. This is a quote-unquote stock-taking exercise, according to the trade chief in the EU. But just one more question on the Ukraine plan, Ollie. You know, Putin hasn't shown any flexibility, not from day one, not from, you know, the pre-war days, in fact. Is there anything that would get him to move on the US side?
Well, listen, I think that is the big question also from the Russian side of this thing. I mean, there are questions about whether or not even that plan that we saw at the end of last week that is seen pretty universally, certainly in Europe, certainly within Ukraine, and among many even of the lawmakers on the Republican side in the United States as really favoring Russia. There were questions about if even that proposal would be okay with the Russians. The thing is with the Ukrainians, what Zelensky learned really the hard way back in February after that catastrophic meeting with President Trump is never be the obstacle. Never be the obstacle to peace. Never say that the United States has had a bad idea. Say, be constructive. Say, yes, this is a good framework, but this is where we need to evolve. And again, the method for the Ukrainians has been to try to demonstrate again and again that Putin is in point of fact the obstacle to peace. That seems to work sometimes, and then suddenly this 28-point plan comes out, and that sort of whole theory is shot to pieces. So this will continue to be the Ukrainian method. Whether or not they're going to be able to demonstrate that Russia is still the obstacle is the big question. I think as it stands, the proposal that we saw at least last week, we don't know what it looks like today, is certainly favoring Russia, and in many ways dealing with many of the key demands that the Russian have. And much of the text, they even say, from some analysis, might have been translated from Russian. So again, a lot of questions about this proposal, how it came into being, and what it looks like today after 24 hours of negotiations in Geneva. Certainly a tense week, Oliver. Thank you so much. That is Bloomberg's Oliver Crook. Well, the G20 summit in Johannesburg has wrapped up. South African President Cyril Ramaphosa struck a final agreement with G20 countries at their summit, despite American threats and false claims of white genocide by President Donald Trump. Speaking on the US's boycott, Canadian Prime Minister Mark Carney said the world can make progress on a range of issues without the US. Joining us now with the latest from Johannesburg is Bloomberg's chief Africa correspondent, Jennifer Sapasaja. So, Jen, multilateral organizations continue to try to do their work, even without some major players, and it wasn't just the US this time around either. But we do have a joint declaration. So what did the G20 agree upon?
That's right, Vani, and especially as you mentioned, of course, we didn't have the U.S. leader who was here at the G20. Also, China's Xi Jinping was not there. And there's even some reports potentially that Argentina was not happy with this eventual declaration. We didn't see Argentina's leader here either. But still, many people are seeing the ability of President Ramaphosa and the G20 to come up with a declaration at the beginning of this summit, despite some of the threats from the U.S. president, is seen as somewhat of a success. And if you take a look at some of the recommendations that were included in it, many of the priorities of this summit and this G20 presidency, which for President Ramaphosa was focused on the global south and Africa at its heart, did make it into the final text. So bolstering multilateralism, increasing climate finance, and also debt sustainability. But if you dig into some of the details of what we were witnessing throughout the weekend, there still seems to be some fracturing and some silos that exist throughout the world order. We saw European leaders obviously dealing with what you were just speaking to Oliver about, the issue of the 28-point plan in Ukraine. We also saw BRICS leaders meeting about debt relief. And so despite this declaration coming at the beginning of the summit, something that many people did not expect, the question is, what, if anything, do we see moving forward from this grouping? And what exactly does this convening and this unified grouping of countries look like moving forward, especially as the U.S. takes on the presidency next?
And interestingly, Jen, we had the Chinese premier there, Li Qiang, defending his country's rare earth curbs at the summit. It was a bit of a charm offensive, really, wasn't it?
Yeah, and I mean, I think that's a great way to put it, Vani, especially if you consider what we saw in the declaration. There were multiple instances of critical minerals throughout this document. Counter that with what we saw just a year ago, and it was just barely mentioned. And so, yes, we did hear the Chinese premier defending some of the export controls that we've been seeing from China, but still in the declaration, there seemed to be a bit of a veiled swipe at some of the actions that we've seen from China, speaking specifically about defending some unilateral actions that have been taken place. And it seemed like some of these leaders were wanting to at least create some more protection for some of these resource and mineral exporting countries, and also give them more of an ability to withstand some of the geopolitical and the trade shocks that we've seen over the past few months. But again, despite all of this, none of this text is actually binding. And so it's incumbent on many of these leaders to take some of these recommendations in the declaration and impose some policies, or at least inform what the negotiations look like moving forward. We saw President Trump and Xi Jinping meeting just a month ago. And so the question will be, how does this now potentially inform some of the investment flows into the mining sector? And also, how does this potentially change the behavior, if it were, based on China and some of the export controls that they've put on? Because, of course, we know a number of these minerals are needed for industry and military in Europe and elsewhere, and, of course, the EV transition. So quite a packed weekend, but the question will be, what does this really look like moving forward? All
right, Jen, thank you so much. That is Jennifer Zapasaccia there in Johannesburg. Now to other top stories trending on the terminal this morning. U.S. Treasury Secretary Scott Bessent said an announcement regarding healthcare for Americans is coming this week. President Trump has said he opposes congressional efforts to extend expanded Affordable Care Act subsidies and favors sending aid, quote, directly to Americans.
We believe health care is going to come down. We will see an announcement this coming week on that. And so across the board, prices are starting to come down.
Japan's Defense Minister Shinjiro Koizumi says plans to deploy missiles to a military base on a southern Japanese island will move forward. Koizumi says the deployment is intended to help lower the chance of an armed attack on Japan. He also said the view it will heighten regional tensions is not accurate. And Alibaba shares are jumping after the strong debut of its new AI app. This bodes well for a longer-term effort to build a rival to OpenAI's ChatGPT. Qwen was downloaded more than 10 billion times in the week after its relaunch. Alibaba says it plans to integrate services from food delivery to travel booking and even office tools directly into Qwen. Well, coming up, BHP walks away from Anglo. More on the latest twist in the mining industry next. This is Bloomberg. This is Bloomberg Brief. I'm Vonnie Quinn in New York. BHP is walking away again. A fresh takeover bid for Anglo American. The mining giant confirmed that it held preliminary talks with Anglo, but said it was now, quote, no longer considering a combination of the two companies. This all comes after Bloomberg's Sunday report of BHP's newest approach, which Anglo has said to have decided was not superior to a combination with Canada's Teck Resources. For more, let's bring in Bloomberg's Dinesh Nair. So, Dinesh, why such a quick exit? We only just reported that there was a fresh approach, and now Anglo seems to have said no thanks, and it's going its own way again.
Thanks for having me. So BHP, if you remember, made an attempt to buy Anglo American last year, almost the same time, and which was rebuffed. And then they went quiet after that. In the meanwhile, Anglo American has gone and agreed on a merger of what they call a merger of equals with Teck Resources in Canada. And that merger is soon to be heading towards a shareholder vote. So I guess BHP, for the time, BHP sees one last opportunity to create a big miner with a significant global copper operation by going after Anglo American again. But that approach was a bit short-lived, as we reported yesterday, that Anglo American rejected that approach, following which BHP has decided to walk away again for the second time.
And of course, it's all a bit of a jigsaw puzzle, and now we're shifting it and making a different kind of a puzzle. So how significant would the strategic upside for BHP have been in acquiring Anglo, especially in terms of copper? Are they missing something now because the deal is off?
Yeah, I mean, it is not just for BHP. Like every mining major in the world today wants to really beef up and bolster their copper operations. A lot of them have significant copper operations, but it's the most sought after mining asset in the world today. There is a lot of demand, and the supply is not meeting the demand, which means mining majors are looking for opportunities to buy copper assets whenever possible. And the two big companies which were target for the big miners were Anglo American and Teck Resources. They having merged kind of takes away a lot of the opportunities to grow inorganically for some of the mergers, some of the bigger majors, and the other copper companies who have available resources are pretty reluctant to part with it. So it'll be interesting to see what happens going forward. I mean, even Teck Resources is not completely immune from an interloper coming in, trying to outbid Anglo American. There are rumors always in the market that someone could come in for Teck. The combined Anglo and Teck Resources could also be interesting for some of the miners who have the appetite and the capability to do large deals. So it's a very interesting time in mining. There's a lot of consolidation play, but it's all driven by the need to acquire copper assets.
Yeah, and shareholders going to vote on that December 9th. Glass Lewis saying, yes, it should go ahead for what that's worth at the moment. Now, what does the bid and the pullback, what does it mean for the broader M&A environment, particularly in mining? As you said, there are other players out there that might, at some point bid for a combined Anglo with something else or a combined Teck with something else.
Yeah, I mean, there's going to be more action. I mean, there are 3 or 4 very large miners who are looking, as I said, to acquire more copper assets. There is consolidation, and scale is increasingly getting very important in the industry. Most of the miners in the last few years didn't deploy too much of capex, which means that the ability to mine a resource like copper is limited. So there is going to be a more inorganic opportunities. And M&A is pretty hot now. So not just in the mining industry, we are across the M&A world. We are seeing situations where, be it healthcare or tech, we are seeing situations where large M&A processes are getting increasingly contested. So we'd expect to see more of that across the M&A world going forward into next year. But in mining, it's particularly going to be interesting to see what the chessboard looks like and who's going to make the move next. As I said, a combined Anglo-Teck could also be interesting for some of the large miners, large majors out there. So there's more to come there, and we'll hopefully get more scoops from what is going to come out of the industry.
Yes, I'm sure we absolutely will. Dinesh, thank you so much. That is Dinesh Nair in Dubai there. Let's take a look at these commodity markets then, because we have oil dropping today after, of course, that run-up on Friday. Prospects for a Ukraine peace deal dominating this market. Investors protecting on the downside. We have New York crude there at $57.61. Gold, though, back above $4,000. And we'll be keeping an eye on other commodities throughout the morning. Coming up, FBI Director Kash Patel is under scrutiny for using SWAT teams to protect his girlfriend. That and a look at what else is making headlines in your front page news. This is Bloomberg.
You can't spend wealth. You have to sell wealth in order to get money to go buy things, okay? And so how do the bubbles happen, okay? The bubbles happen in the way that you create these needs for money, and then the wealth rises, and then there's a need to sell it. For example, let's imagine that we put in wealth taxes, okay? Okay, what's gonna happen? Those are gonna need to sell some of that stock to be able to get up the cash, to be able to pay taxes, right? whether it, for whatever reason, the need for cash happens and you want to make a conversion from wealth to money to be able to come up with the money.
Bridgewater founder Ray Dalio there speaking on the latest episode of the Odd Lots podcast, released today and celebrating 10 years. Time now for your front page news. The Financial Times reporting the European Union is planning to tighten its foreign investment rules to ensure Chinese companies do not gain advantage from the bloc's open market without generating benefits for local workers and sharing technology. The FT says the rules are part of a series of proposals to bolster Europe's ailing industrial base. And the New York Times reporting FBI Director Kash Patel is under scrutiny for using SWAT teams to protect his girlfriend. The incident in question was at the National Rifle Association's annual convention, an already secured site. The Times says Mr. Patel's heavy use of taxpayer-funded resources has the administration questioning whether he's exceeding the bounds of standard practice. Well, coming up, we'll look ahead to this week's data and, of course, the market action with Allspring's Lauren van Biljon. That's next. This is Bloomberg. It's 5:30 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. December in the balance. Stock futures getting a lift as traders increase their bets on a Fed cut in 2 weeks. A Thanksgiving deadline. A top aide for President Zelensky says progress on a peace deal as negotiators from Ukraine and the US prepare an updated framework. And healthcare announcement incoming. Treasury Secretary Scott Bessent says a plan to bring down US healthcare costs is coming this week. Let's take a look at those markets because we're off our highs of the morning, but we are pointed into a green session today for a holiday-shortened trading week with Thanksgiving on Thursday, of course. The back and forth on a December rate cut, the background here with odds now around 75% for a cut in December. Now, you'll remember the S&P did rise 1% Friday, but that left a decline of 2% on the week. The Nasdaq 100 also up Friday by about 0.75%. That left it more than 3% in the red last week. So it was a difficult last week for many traders. But there's plenty out there that see good news. Mike Wilson, for example, saying the end of whatever correction this is closer than the beginning. There are plenty of questions leaving investors a little edgy, though. Let's take a look at the bond market as we are thinking about those. Of course, we have still the question of tariffs, the state of private credit markets, the AI trade, and fresh batches of data potentially awaiting us. Look at that 10-year yield below 4.05%. Well, let's get to some individual movers now and from some stocks to watch. Over to London and Chloe Melly. Chloe.
Good morning, Bonnie. Alibaba shares are up this morning after its AI app Qwen debuted very strongly with more than 10 million downloads in the first week since its relaunch. So that is boosting Alibaba's efforts to rival OpenAI's ChatGPT, and it poses the question of whether or not it will be able to leverage this app to drive people to its consumer business. Moving on to another rival to ChatGPT, and that is Alphabet. Alphabet is also up this morning after Salesforce CEO Mark Benioff praised Google's Gemini 3, saying it was ahead of its rivals, that it was a breakthrough performance with sharper reasoning, and that he would not be going back to ChatGPT. And we can see that praise going into the Alphabet shares this morning, and we are up 2% there. And finally, Bayer over in Germany is up quite strongly after saying that its experimental stroke prevention drug yielded very positive results in a clinical trial. That is a definite boost for a company that's been dealing with quite a lot of legal troubles, as well as growing generic competition for its blockbuster drugs.
All right, Chloe, thank you for that rundown. That is Chloe Melly there in London. Well, Friday's upturn in global risk sentiment set to continue, it seems, today after dovish Fed speak from New York Fed President John Williams. Allspring's Lauren van Biljon says every position in a portfolio must be earning its place, but calculated risks require data. Lauren van Biljon is a senior portfolio manager specializing in rates and FX at Allspring, and she joins us now. So, Lauren, without data, you can't calculate anything, but this market seems to think you can because it's very much pricing in now the potential for a cut in 2 weeks' time, where it wasn't just a couple of days ago. Is this market reading things right?
Yeah, that is the question, isn't it? And we've had this back and forth on interest rate pricing a couple of times now, right? all the way into December, nothing in December. Now we're sort of most of the way back to December. I think the key point for me is that what's not changing at all is that projection of terminal rate, right? That seems very solid around that 3% level, given what we know currently. But there's plenty of space to argue sort of on a meeting-by-meeting basis.
So we've seen quite the move in stocks. We haven't seen as much of a move in bonds. I mean, yes, the 10-year now is, below 4.05, but I mean, we've seen it in pretty much of a range, 390 to maybe 415 for a long time now. Is it pricing in reality, or is it just pricing in confusion since we don't have any labour market data to speak of?
Probably a little bit of both, if that's possible. We know that right now the labour market is key to the pace of interest rate cuts from the Federal Reserve. And so the last couple of weeks of silence have been difficult. There's a limit to what alternative data can tell us. Obviously looking forward into this week, we know claims data on Wednesday is going to be probably definitive for the Fed, given that they don't have a lot else to work from going into that December meeting. But again, also, you talk about that sort of limited range of the 10-year. Again, is that not down to the fact that those longer-term projections have been pretty stable?
Yes, and the move index has been very, very low and so forth. Do you imagine that the Fed chair is okay with having said that, look, when you're in fog, you slow down, and that the market took that to mean, okay, December is off the table? Or does he regret that a little bit now?
Well, we know this is a Fed that has been very data dependent. So, perhaps a reminder of that is not a bad thing for the markets. And it is true as well, right? For a while, it didn't seem that there was any hurry to get the US shut down, sort of ended and over, and data flowing again. So probably at the time he was saying that, right, he wasn't quite sure how long they'd be operating in that fog. And I think it's good to acknowledge that with less data comes sort of less reliable forecasting and more difficult decisions.
Yeah, and again, we could have something similar at the end of January, although if we do get some kind of an announcement on healthcare, maybe that changes the equation and so forth. What are you doing with your portfolios now? We're heading into year end. We don't really know what the Supreme Court is going to decide on tariffs or how much of an impact that will have on markets either way. We're not sure about another shutdown at the end of January. And of course, we're going into a new year. Bitcoin seems to be off the rails at the moment, and gold is still above 4,000. So what do you do in the fixed income universe?
Yeah, it's an interesting mix, isn't it? And it really does speak to a market that is can be liable to trade on a bit of a hair trigger. We certainly are seeing a very headline-driven trading environment, which creates risks, but also does create opportunities. We like to think about, at Allspring, we like to think about sort of our 6-month outlook, and that's sort of a lot of how we sort of allocate our capital. Obviously, the shorter-term tactical trades, but we don't want to lose sight of that longer-term picture. What the current environment says to us is that you need to be really diversified in terms of your sources of alpha. So really considering, what different sectors can we use to earn our clients the return that they need. So it's being very careful with our risk management. And right now in the corporate space, we still like securitized debt. I think that offers a lot of value. Probably looking more sort of towards the higher yield, higher rated or higher quality end of the corporate credit market. But again, making sure that the yield you're getting is compensating you for all that sort of swirling headline risk, which is certainly not going to be abating anytime soon.
And I imagine you think of a lot of that as noise. If you think, look, we're headed for the same terminal rate at some point anyway, it doesn't matter if it's maybe a month or two later or a month or two sooner. So where are you looking at maybe that higher rated debt, in the United States or in Europe or elsewhere?
We like to have that global diversification. Again, right, if you've got the sort of the global reach, make full use of those global markets. And like you say, there is a fair amount of noise, and that can, so if things are overshooting, that can sort of really sort of juice a position when it comes to either taking profits or sort of offering a better entry point. But it does mean that you need a kind of laser focus on where you think value is, so if you think it's overshooting in either direction. So a lot of fundamental work, a lot of sort of careful thought, and again, right, diversification, just bringing on as many different alpha sources as we can do.
And just in terms of sovereigns then, Lauren, and of course the UK budget is coming this week. I imagine you're positioning ahead of that, or maybe waiting to see what happens there. But what parts of the curve, both in the United States and in the United Kingdom, look attractive right now?
I think it's all year. It's been a story of that sort of 2 to 5 year area of the curve. I think has been the most interesting, and I think that's still true. Very long-dated bonds are still struggling around fiscal responsibility and sort of longer-term fiscal outlooks. But I think that 2 to 5 year, you can sort of express an interesting view on monetary policy. You can kind of capture some of the noise that's coming from sort of shifts in employment data. So I think in the UK and the US, both of those markets, that's an area that's interesting to us. The UK is just a ball of noise at the moment. I don't think that's going to change anytime soon.
It's going to be a fascinating Thanksgiving, let's say, for those who are keeping their eye on the United Kingdom as well. Thank you, Lauren, for joining us this morning. That is Lauren van Biljon of Allspring Global Investments. Coming up, President Donald Trump posting on Truth Social moments ago about the Ukraine talks, quote, something good may be happening. More on that next. This is Bloomberg.
We believe healthcare is going to come down. We will see an announcement this coming week on that. And so across the board, prices are starting to come down.
The Trump administration looking to address an impending surge in health insurance premiums after the president said he hoped to secure a plan by January 30th. Joining us now from Washington is Bloomberg's Kasia Kimashinska. Kasia, what do we know about what this plan might entail?
We know that the name of the game is affordability and the cost of living. The White House is focused on that, and we expect an announcement perhaps as early as today on the healthcare and the healthcare costs. We know that that was the reason actually the government shut down, and Democrats were pointing to the healthcare insurance costs going up next year for millions of Americans, and so President Trump is about to take action. We don't know exactly what that will be. Trump has said before that he wants dollars to go directly to people and for people to make the decisions how they want to spend them to increase their health insurance. But now Politico is reporting that perhaps the White House is considering extending the healthcare subsidies that Democrats wanted to be extended. So there could be an extension for additional 2 years, but maybe coming with some caps on income and some mandatory minimum premiums.
Yeah, we might get some kind of clarity as well this week if Scott Bessent to be believed. Elsewhere, we have Secretary of State Marco Rubio speaking after talks in Geneva, obviously on Russia, Ukraine and the peace plan. He was optimistic, at least. Take a listen.
It is in my personal view that we've had probably the most productive and meaningful meeting so far in this entire process since we've been involved in from the beginning. We have a very good work product that was already built on a foundation of input from all the relative parties involved here, and we were able to go through some of those items now, point by point, and I think we've made good progress.
So, Kasia, it seems that the Thursday deadline, the Thanksgiving deadline that Donald Trump had put out to Ukraine might even be pushed back into next week if this progress continues. What do we know about what this progress actually entails?
There was a flurry of activity over the weekend in Geneva, and we just had a post from President Trump himself on Truth Social saying that perhaps some progress has been made. So maybe this deadline that was for this Thursday, the Thanksgiving holiday here in the U.S., will be extended. Marco Rubio said that maybe into next week. And President Trump himself said that when the sides are talking and when there is progress made, he can extend those deadlines. And indeed, there was a lot of talks between the U.S. and Ukraine, also some conversations between the U.S. and the EU. And Secretary of State Marco Rubio and Ukraine both signaled that some changes have already been made to this initial 28-point plan that Ukraine really didn't like. So we expect to hear more on that, especially from the U.S. side today, about where exactly the changes have been made.
And then in terms of Venezuela, because obviously we have to keep an eye on what's happening down there as well, we have U.S. Joint Chiefs, the chair of the Joint Chiefs, Dan Kane, meeting members of the U.S. Southern Command today, ostensibly in Puerto Rico. The military presence obviously has swelled there as the U.S. weighs more military action off Venezuela and in its waters. What do we know about, this kind of meeting and what it might portend?
This is a situation that we are watching very closely for potential escalation, as President Trump said that Venezuela is on his mind, that he will continue to target this country. He believes that this is where the narcotics are coming from into the U.S., killing millions of Americans. So the U.S. has been attacking boats allegedly carrying narcotics into the U.S., shooting them down. And now we have this visit in Puerto Rico with a very high-level Army general talking to service members, and President Trump himself said there will be more action taken. Also, over the weekend, the U.S. FAA warned airlines against flying over Venezuela, and as a result, several airlines canceled flights to and from Venezuela.
All right, Kasia, thank you so much. We will keep our eye on all of the geopolitical moves. That is Bloomberg's Kasia Klimashinska. On the trade front, the U.S. and China continue talks over rare earths.
Our hope is still that the deal that was made is a solid deal that they'll continue to adhere to. But don't forget that the rare earths problem is being solved rapidly by President Trump's policy, which is basically almost like a warp speed policy for rare earths. And you might have seen on TV this week that Secretary Bessent actually held a magnet made in the U.S. He said it might have been the first one that's already being produced because we recognize that we don't want to be held hostage again.
Joining us now is Bloomberg's Brendan Murray. Brendan, where are we in this whole process? Because we're reporting that, total exports to the U.S. this year to October are down more than 20%, but we did have the highest month of exports from China to the U.S. last month.
Yeah, there's still not a whole lot of clarity coming out of China on where exactly its export licensing program sits, because the U.S. And the Chinese side are supposed to sit down and figure out some of those details that they agreed to several weeks ago, to finally get some of those rare earth minerals, things like magnets, flowing again. China has set up this dual-use program for commercial purposes and also for military use. So it's very hard to distinguish sometimes which companies are in just commercial businesses or military as well. So there's a lot of fine print that needs to be looked over. And at least the U.S. side, the officials in Washington think that they can wrap this up by Thanksgiving or late September is what they've said. But we don't know yet whether they're going to be able to do that.
Yeah, and China at the G20, touting its rare earth expertise as well with its charm offensive. Meanwhile, in Europe, we obviously have officials pressing U.S. officials today. But the EU is warning Howard Lutnick, for example, against expanding the U.S. steel tariff scope. How likely is it that he might do that?
Yeah, exactly. So two U.S. officials, the U.S. Trade Representative Jamieson Greer and Commerce Secretary Howard Lutnick, are in Europe today to advance some of those talks in a similar way to the Chinese deal. All the details of the EU-U.S. framework have not been worked out, and the U.S. has in the past criticized Europe for dragging their feet. And so this is another opportunity before the end of the year for the two sides to get together and say, all right, what are our loose ends we need to tie up? The European Parliament needs to move on some of the pledges that Brussels has put forth. And so the U.S. Officials who are there are going to want a status report on the concessions that the Europeans made. And the Europeans are going to want some insight into how long they're going to suffer under these extremely high steel tariffs that they're facing that are doing a fair amount of damage to the European industry.
And then, Brendan, we're obviously waiting for the Supreme Court decision on tariffs as well. The President truth socialing about it in the last few hours, saying that the full benefit of the tariffs has not yet been calculated, and he's looking forward to the Supreme Court's decision on this urgent and time-sensitive matter. There are some calculations out there, but there's a lot of conflict as well as to what the tariffs would mean, and if they were to come off, what that would mean as well for the purse, right?
Yeah, exactly. I mean, there's a huge question about the fiscal consequences of this. If that revenue stream goes away, how would the government pay its bills? What would you do with the refunds if you gave it to consumers or you gave it back to the importers? How would that affect the economy in the months ahead? There is a report that Bloomberg has out over the weekend that they really are coming up with a plan B in case they do lose that Supreme Court.
All right, Brendan, thank you so much. Another busy week in trade. That is our Trade Czar, Bloomberg's Brendan Murray. Turning to tech, shares of Alibaba getting a boost after a strong debut of its new AI app, Qwen. It was downloaded more than 10 million times in the week after its relaunch. Alibaba says it plans to integrate services from food delivery to travel booking, office tools and lots more. Joining us now is Bloomberg's Neil Campling. So Neil, ChatGPT isn't available in China anyway, so how important is it to China that Qwen gets downloaded? Does it really matter? Does it have a sort of a rivalry with ChatGPT in this regard?
Yeah, I think so. I think what's important is that the download speed, if you like, just reinforces the appetite and interest there are for AI apps globally across the world. And so you would expect in an app-led economy like China that this is certainly a boost for domestic sentiment for the AI trade. And it just goes to show, I think, that there's a huge amount of interest in AI as a thematic. And this is another positive step for China, China's progress in that regard.
Now, it's talking about, gradually adding agentic AI features to its Taobao marketplace, for example. Is it doing that faster than US models? Is it able to, incorporate these agentic AI tools better and faster? And is it going to show us the way?
I think certainly what we have to consider that for a company like this, they have a moat. And that sort of reinforces that moat, if you like. And I think we're beginning to see similar things in the US. There's been a huge turnaround in sentiment towards Alphabet, towards Google, in the last 6 months, actually, in terms of what their AI moat is. And I think at the moment we are in that potential phase of working out which of the AI haves and AI have-nots. And that's something we're going to see coming through in adoption curves, in the use of these particular AI apps, and as it flows through, importantly, into earnings and growth for the companies that have deployed huge amounts of CapEx and hyperscaler CapEx into the AI vertical.
Well, certainly Alibaba is benefiting this morning in this morning's trade anyway. Bloomberg's Neil Campling, thank you so much for joining. Coming up, we're going to get you set up for your shortened trading week this Monday. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Now a look at what's ahead for the week, a holiday shortened trading week, obviously. Well, we do get some data, retail sales and PPI kicking off the week's data on Tuesday. Then we still do have some stragglers on the earnings front. Earnings from Dell, HP, Best Buy and Kohl's also coming on Tuesday. And US markets obviously are closed on Thursday for the Thanksgiving holiday, but you do get the UK budget on Thursday, so something to look out for if you're not too hungry, let's put it that way. Let's take a look at where we stand, because futures are pointed higher, though we're well off our highs of the session. We have the dollar with really no movement to it. Same for the 10-year yield, but certainly the pricing for a December cut has gone up massively, about 75% chance now of a September cut. Let's take a look at some other asset classes that are reflecting that. Gold is back above $4,000 an ounce. And then we have a little softness in crude, also Bitcoin, although it did rise from its 7% low last week.